Hey everybody, Jim Malone here. It is a Thursday, and it is raining here in Dallas. Just came back from the parking lot, and I'm all wet. But the stocks are kind of sideways a little bit, but we've had some seriously good up days. Looks like Apple is moving up nicely, so that's kind of good to see. And just kind of a general day. Let's just get into the slides. So without further ado, let me go ahead and make sure everything is copacetic here. Hopefully my there we go. And that is the market direction. There we go. Okay, definitely in a confirmed uptrend. We're definitely in a confirmed uptrend, and that is indeed a good thing. We're still, it seems as if we're shaking off a lot of the issues regarding the election. So hopefully we're gonna settle down a little bit. It looks as if, oops, get that. There we go. It looks as if the, we may be getting some more stimulus. And I heard some rumors that there may be some help for first-time buyers for houses. And I wanted to show you an interesting ETF, a home building ETF today. Just kind of, because that one looks like it's just right at the buy point, and possibly, there's something there. So, basically without further ado, let's kind of look at the charts and the directions. I'm going to show you the S&P 500 ETF. This is the SPDR. It's the world's largest ETF, and there's a very key level on it, and I think we're well above it. So, we're doing very well. The key level really is about this 360 level. We're way up here at 384.81. The question is, is the rally getting tired? Well, it seems like it hasn't broken yet. I do expect, though, that we will probably see it break. Who knows when, but we probably will see it break. But at least for that, right now, it's pulled up nicely. It's up about 0.2% at 384. The key level, of course, being that 360 level. So looking pretty good on that one thing, with the SPDR. So the reason I show the SPDR is because that is the overall market. That's really the Fortune 500 companies, basically the 500 largest companies. So that means that there's still money flowing into the general overall market, and that is indeed a good thing. Also want to show you the QQQ, and this is the NASDAQ 100. This is the top 100 stocks that are in the NASDAQ index, and this is also up today, about $2.83, or about 0.9%. So there's a little bit more money going into the Qs than the S&P, but at least money is continuing to flow into the market. So that's good. That's quite good. As you can see, 326.60 on this one. The key level, I believe, on this one is about this 300 level, where the 40-day moving averages. That's this red line here that I will show you with my pointer. Okay, let's see if we get that pointer up. Very good. This is the 40-day moving average. It's well above that. Where this 40-day moving average is, that's the key level. We're still moving up very nicely. The relative strength line is upward trending, which is good, and we're at at a 61 relative strength. So on the Qs, that's very good. So that means that money is starting to move back in to some of the big tech names. Now, the interesting thing about this is that I'm seeing some movement back into Apple, and also we saw some into Amazon. So, could this be the start of something new? I'm not sure. I'm just not sure of that. But it does believe that, it seems as if, we've been pulling back for about the last month or so on some of the big FANG stocks, and it seems like we're starting to see a movement back in, at least tepidly, into these stocks. Wanted to show you a very interesting ETF. It's called the ITB, and it is the home construction ETF, and it's right now, it's right at a pivot. You know, that pivot right here is about, you know, is about 60 here. So very significant. The reason this is significant is because I do think that you know, there may be some help with first-time home buyers, and of course that would really make the make this ETF probably move well. It's right at a pivot right now, so you know, definitely something that you want to put on your radar list. Here's my, I'm actually in very few stocks right now. I'm in Blink Charging. It's up today, down a little bit on Progeny. This has been a tremendous performer for me. I'm probably going to, you know, I may move into this even more. It's about 99% held by funds. You know, not very many individual investors like me in it. I'm in Tesla. It's down a little bit today, $5, but it's still holding in that kind of that range, really from about $7.95 up to about $8.55. I think if it moves beyond about that $8.55 level, then I think it's going to move up higher. But right now it's sort of trading in a range. So that is indeed going. Interestingly enough, as you can see with Amazon, huge movement into Amazon today, and that portends that the FANGs may be back, at least the Amazon FANG, and this should do very, very well, even if we continue to be shut down. Somehow, I believe that we're going to open up the economy. I certainly hope so. It seems like, you know, after the election, you know, the fact that, you know, the Democrats have won, all of a sudden we don't have a COVID problem. But, you know, I'm being cynical here. So, but I do think the economy is going to open. But Amazon's looking good too. GM is down a little bit today, but this has been a stellar performer. I've been increasing my position in GM. So, you know, it's funny. I've never owned GM before. I mean, I've owned GM cars, and I actually own a Chevrolet pickup truck, but I've never, you know, it's my other car. But, you know, the interesting thing about it is that, you know, I've never owned GM. GM, for some reason, is looking fairly good. So, you know, go figure. Go figure. I never thought I would say that I would ever buy something like that. It's dowdy as that. But remember, GM went through bankruptcy in 2013, and it was restructured, so it got rid of a lot of debt. It's courtesy of the American taxpayer. I hate to say that, but it's true. Thoughts on Workhorse, and this is from Jay. Thanks so much, Jay, for hanging out. And let's look to see if we can see something for Workhorse. Just kind of want to look at it real quickly. And that's WKHS. WKHS. Now, interestingly enough, for some reason in the last, I would say 3 or 4 months, the automotive sector has been getting a lot of love. As a matter of fact, it's you know, it's typically in the top 10 sectors every day. So, and that's one of the reasons that I'm overweight in the automotive sector in Tesla and GM. This one also may have benefited a little bit from that, but let's look at it. It's kind of in a consolidation here on the weekly chart, as you can see. There is a buy point on it. It's a first level consolidation at 22.90. It's at currently 23, so it's really just almost right at that potential consolidation. It's got a 98 relative strength, which is very strong, and we're coming up, I think, to earnings here pretty quick. Let me just check to see, yeah, when earnings are. Okay, they're on March 10th, so we have a little bit of time for earnings on this one. And the last earnings, that's interesting. Okay, up 800%. So that's really interesting. It's looking pretty good. Let's look at the checklist. Unfortunately, the checklist on this one is very weak. You know, 55. I would not probably buy this one. I mean, it is setting up, but I'd like to see more strength. Yeah, unfortunately, this tells the tale here on that daily chart. You know, we have this kind of resistance level here at about 31. It's pulled back from there. It's in a downward trend. Now, it might reverse off the 40-day line, but for right now, I would be a watch list on this one. I would wait, possibly get a reversal. It's still very strong relative strength line, but unfortunately, as you can see, and this is the relative strength line, this little blue line here that I'm kind of showing you, it is pointed down. And that kind of means that this issue is losing strength relative to the other markets. So right now with Workhorse, I would watch list it. I wouldn't go into this one, wouldn't buy this one. right now. You know, it's in a good it's in a good area. It's in a good group. Let me just take a look at the industry sector. It's number 11 out of 197. So there's a lot of investment right now in automotive parts, automobile manufacturers. So this is kind of a good place to possibly start looking for deals, because this is an area that the market is flowing into. And of course, one thing you've got to realize about the way the stock market works is that money will flow from one sector to the other sector. It's always best to be in a sector that is being heavily invested in. And currently, that is the automotive sector. So, you know, I definitely think, you know, Workhorse is a good one, but I think you're going to be a little disappointed if you go in now. I think you can't really buy it at this level. It's a watch list stock, but, you know, still very good, and you know, and very good in a lot of ways. Here's the thing I kind of want to show you again on some of this thing. Again, it's got a weak checklist, unfortunately, and it's good in the sectors, and the ownership is good at 160 funds in this one currently. So that's good, but it's really a watch list. Not a good time probably. If you have it, you know, I would hold it, but you know, I think that we've got to wait for a reversal to buy it. Remember, you always want to try to buy as a stock is moving higher, because that way you can, you know, you can benefit. It's buying a stock that is moving lower is not a good strategy. So I try to indicate, you know, by buying a stock as it's moving higher. So, and one of the ways you can do this, you can make this kind of move in the market automatically, is with what they call a buy stop limit order. So, you know, the buy stop limit order is a great way to automatically go into, you know, it's a good way to go automatically into a stock. And what do I mean by the buy stop limit order? Well, if you get a buy point, and I try to give buy points on the show, if you get a buy point and the stock is buyable, then you want to buy it, but you want to buy it as it's moving higher. And one of the ways you can do that is with the buy stop limit order. So there you go. Okay, so let's get to TikTok, because people have been waiting, and thank you very much. And by the way, if you're on TikTok and you're looking on TikTok, today, I am simulcasting this on YouTube. So if you want to just jump over to the and see all the charts and everything, super easy. Just go to my profile. You'll see an embedded form. I mean, that'll show the YouTube channel. Just press on the start button there, and you're good to go. So that's the way you can kind of easily toggle back and forth. Okay, is it time? Question from TikTok: is it time to start seriously investing in airline stocks, United Airlines and Delta? And well, you know, there have been some people that have made airline stocks. I have not been recommending airline stocks, mainly because I'm still waiting for the economy to open. Now, of course, the stock market anticipates it opening, so maybe we could start nibbling around. The best of the breed is DAL, and of course that's Delta Airlines. So let's look at Delta Airlines chart to see if there's anything we can kind of see here. It has been improving a lot. It has been improving a lot, and there is a buy point on Delta right now, a second stage cup at 43.76. So here, let's kind of look at it. We still have a very low relative strength at 67, and we've been at money losing, which is never a good thing. And we have declining funds. So normally I would say no, this wouldn't be a good idea. But I do think with the reopening, there will be increased travel. Now, the question is, can you buy this? Well, I do believe that, you know, we're getting to the point where it's viable, but we're not there yet. The checklist is only 44%, 4 out of 9 of the key criteria that I use. So in terms of buying Delta Airlines, it's not yet ready, but it is getting close. And there is this cup formation on it, and there is a buy point. There is an indicated buy point at 43.76. But I would wait on this one. I would absolutely wait on this one to get back in. So here's kind of my my advice on the airlines. I think it's a little bit too early. I think we still need to watch them. I want to see some more strength in them, but it's definitely something you want to put on the watch list, because when the economy reopens, it will be strong. I mean, I think there's a lot of pent-up demand, but we're just not ready time to buy right now. Now, why wouldn't I buy? Because here's the thing: I typically don't like to buy cheap. I typically don't want to buy cheap, and the reason I don't is because if we were to get a second or third stage pandemic problem virus, then these stocks would fold like a house of cards. So I want to see a little bit more strength before I commit to this sector. Right now, the sector that is seeing the pent-up demand for travel is the automotive sector, not the airline sector. Nothing wrong with the airline sector, but because it doesn't allow for distancing, it's more of a problem. But on the other hand, there's a huge pent-up demand for private cars, and so car sales have been good, not only at the manufacturer level, but also with some of the dealership groups like Lithia Motors. So that's my opinion on the on the airlines. I don't think it's a bad group. I just think it's not yet time for it. So I think it's a watch list and not a and not a thing. Now, speaking about the vehicle manufacturers group, NIO, which is probably one of the there's really 3 or 4 leading companies in China that are manufacturing cars, and of course NIO is one of them. But one thing I want to highlight here is that, of course, I'm invested in Tesla and in GM, and you can see that from the small portfolio that I have. But I am not invested in NIO currently, and the reason is because I don't think NIO provides as good an opportunity as General Motors. General Motors is actually the largest manufacturer of cars through its joint ventures in China, and I know that's hard to believe. They're the second largest EV maker after Tesla in China, and they're also the largest manufacturer of piston-driven, internal combustion cars. The reason that I say that is mainly because of their joint ventures. One of the joint ventures is between SAIC, which is one of the largest manufacturers of cars in China. So I think that NIO you can make money in NIO, but I do think it is pulling. It's just not right in the sector. It's currently has a very, very strong relative strength at 99. That's terrific. I mean, it's even better than Tesla's. Tesla's rating is only 98. Only 98, I say. But I think that we're going to see a rotation out of some of these Chinese automobile manufacturers like Li, and so I think we have to be a little bit careful right now. It's up today, $2.13. So it's not a bad stock. And we definitely could make probably some short-term money on it. But here's the thing. We haven't really effectively moved above the buy point. And it's been, the buy point has been out there since early December. So there's a key level, and that's 57.20. And we have not, we moved above it briefly, but then we were trending down. So currently there is a downward trend on NIO. And even though this is sort of trying to form a cup with handle, it's still not time. If it pulls back maybe to the 40-day line and then reverses, then you might have something. But right now, not a good time to buy NIO, at least in the short term. It's going to be pulling back a little bit more, and then it may show signs of reversal. It's up today. It may be reversing today, but I just want to wait on this one to see. It's approximately at the buy point at 57.20. Currently, it's at 58.40, and the volume looks good. So, personally, I wouldn't be buying it at this point, but it's not dead money by any stretch of the imagination. So, NIO is still looking pretty good, but I think it's a watch list. I wouldn't be moving into it just because I think there's better alternatives than it currently. All right, Mr. Singh, thank you very much for asking the question. Are you still holding Progeny? Yes, I am. Believe it or not, I am. I have done very well in this stock, and I didn't think I would, but it's a very interesting stock, PGNY. As a matter of fact, I was thinking about actually moving into, increasing my position. Here's the chart on Progeny, and I'm very. The reason I'm still holding it is because as you can see, this 10-day line here. Now I almost sold it when it pulled back to the 21-day line, but it didn't. It never hit it, and it reversed. So I'm still a holder because of the upward trend. Let me get that. There we go. Okay. Click. There we go. Well, sometimes my pen works, sometimes it doesn't. It's pulled back a little bit, but it's still above the 10-day line. So I'm a holder of this. I'm just pushing up my stop loss, and currently my stop loss is at about 43.50. That's currently where I have it. But it does have a downward trending RS line, so we may see a little bit of a pullback. But as long as it stays above the 10-day line and above the 21-day line, I'm pretty happy. Pretty happy camper. Would I buy it at this point? Probably not. But it does have an excellent checklist at 88%. So that's looking really good. The only thing that we have a troubling area is earnings per share, and that's really not as much of an issue because it's just stellar in every other area. Now there is it's about 99% owned by funds, so this is really an institutional stock, not an individual stock. But remember, it's the institutions that push stocks higher. And we have increasing fund ownership. So those are all kinds of things I'm liking. I'm probably going to be a holder because it's, currently I'm up, I think 47% in like about 2 months on this stock. So I am still a holder of Progeny. Have not sold it yet, but if it does, if it does pull back, again, I'll be pushing up my stop loss and I'll be moving out of it. But right now it's pretty good. Okay, let's look at another question. Let's look at Open. Okay, Open, OPEN is the Open Door Technology. Interesting. Okay, this is a buy and sell homes. These home selling stocks. One thing, the biggest problem right now, at least here in the Dallas area, is the lack of inventory. We just don't have enough homes out here because everybody seems like they're picking up roots from California, like I did, and moving here. But so some of these companies, they do very well because they're being a little bit more competitive in terms of the listing fees. So that's kind of looking good. Now let's take a look at the chart to see if there's anything here that we can find. So let's go first to the weekly chart. That's always where we want to start. And this has a nice IPO base. It moved out of this consolidation, so that's very, very nice. And then boom, it just has been moving right up the 21-day exponential. So that is an excellent sign. Now it's pushed up today $3.64, which is tremendous. That's 13 points. Almost 14% in one day. Can you believe it? Well, in the week. Let's look at the daily chart. It's pulled back a little bit, but there's this $27 cup buy point on it, and it looks like it may be kind of forming a handle. It's a little bit extended above that buy zone. Let's see if it pulls back a little bit and then it reverses. But this is looking very strong. This Open Door Technologies. Let's see if it pulls back. I'd like to see it pull back to the 10-day line, which is basically about 27.50. It's at 29.70, but you could buy it at this level. It's a little bit extended. I probably would not be a buyer of this level. I just kind of wait a little bit, see if it pulls back, see if there's a reversal, and if there is, then I think you might have something really good. Let's look at the industry. 45 out of 197. That's pretty excellent. That's in the top 60%. We always want to try to stay in the top 60% of the sectors. That increases our chances for a good result. So, everything looks very good on this stock. That's a good suggestion, Mr. Singh. And so I'm gonna put that down, OPEN, as a watch list for me as well. So thank you very, very much for that question. So let's go to a question from TikTok. Thank you for holding here. Everybody's been so patient. That's great. How do you choose EMA, 9 days, 20 days? Or this is a good question. This is what this gentleman is talking about is the moving averages. And typically the moving averages that I work with, and I'll just kind of pull it back to let's look at GM here for the moving averages. I kind of just want to kind of show you which ones that I typically use. You always want to use the and you want to start from that weekly chart first because that's going to be where they are. So the question is, let's go back to let's go back to the daily chart. Excuse me, because that shows all the moving averages properly, and I don't have them turned on the weekly chart. So just because it messes it up a little bit for me, it's a little hard to see for me. This black line here. So I always use the 200-day. This is sort of you just don't want to invest in anything that's not above the 200. Really, you just don't want to, because if it's not above the 200, that means it's losing value over a long period of time. So it's being disinvested in. So that's one of the first ones that I look at. The second line that I'm very interested in, of course, is on the daily chart, the 40-day line. And the 40-day line is, is it above the 40-day line? Well, that's a very good thing. Now, typically when a stock is going to start to make its run, the 40-day line will cross above the 200-day line. And this right here is called a golden cross. And what do I mean by a golden cross? Well, when you see this happen, you want to kind of put this on your watch list, because this stock is being invested in. This is exactly what happened with me with GM. I mean, I had seen some of these consolidations here, but I wasn't really interested in it until this golden cross happened, and then I became much more interested. And then as it started to move up, then when we had our first cup here, I was very interested, and I started accumulating right about at 46.71. So that is the second one that I like to use, and that is the 40-day moving average. Now, the third line that I use is this line here. It's the 21-day exponential. And the 21-day exponential is a very important line, only because this is what many of the programmatic traders use to trade. Now, over 80% of the market is traded by algorithms. So you don't want to be on the wrong side of an algorithm. So therefore, I typically will take this line, and this is where many times after it starts moving up, this is where I'll set my stop losses. This is why I'll set a little bit below this. And the reason why I do that is because at that line, that's typically where if it's retreating, that's typically where it'll bounce, at the 21-day exponential. So that's the green line here. Now, there is another line that I put in, especially, it's called the 10-day line. And I don't know if you can see it. It's this little tiny pink line. And the reason I use that is that tells me if the price is above the 10-day line, that tells me that I can enter the stock. I potentially enter the stock because it's moving faster. It's faster higher. I typically don't like to enter a stock unless it's a reversal. Now, what do I mean by that? If it's a reversal, then I will enter it if it's below the 10-day line. But if I'm adding to a position and I want to see it above that 10-day line in order to add to that position. So those are the lines that I use. And thank you very much for that question. That's a great question. I probably should make a chart school on that one, because it is such a good way to look at stocks. Jim, thoughts on two volatile stocks, RIOT and Blank? Cheers. Well, here's the thing: as you know, there was a huge sell-off in Bitcoin in Asia, and this was really when Biden. It looked, it was definitely for sure that Biden was going to be nominated. There was a huge sell-off in the Asian markets on Bitcoin, primarily because there is a fear, and I think it's justified, that they might, be trying to regulate Bitcoin out of business, at least in Asia. I don't know exactly everything about it, so I may be studying this incorrectly. But it pulled back tremendously. Now, I was in Bitcoin as well through the GBTC, but again, I set my stop losses at 7%, so I got stopped out. And this is I always recommend putting that stop loss in, because regardless of how well everything is setting up, because Bitcoin was setting up very, very well prior to Biden. Prior to the Biden inauguration, it was setting up extremely well, and and then it moved down. So that's why you want to have those stop losses in there. But I think Bitcoin will bounce, because I don't think this thing is over because I think the market is going to be flooded with lots and lots of cheap dollars. They're trying to get inflation going, and I think people will possibly come back into Bitcoin. But right now, it's going to be pulling back for a little bit. It's good to watch list it, but right now we don't want to be in it just because it's going to pull back severely. And then when what'll happen is it will pull back, it will base, and then once it's based and there's a proper buy point, definitely I'll probably be back into it, because I do think long term, I think Bitcoin is really good. Now, RIOT blockchain is a little bit different because they use the blockchain technology as part of Bitcoin. Now, it's not a Bitcoin play, but I do think that potentially RIOT blockchain in the future has even bigger applications, but it's mainly applications in terms of title and those kind of things, digital title. It's been pulling back crazily, and so if you had your stop loss in here, you would have been okay. But unfortunately, right now, if you win in it, you're going to be in a little bit of trouble. I would recommend selling this one. Why? Because if you look at the chart, especially let's look at the weekly chart first. But as you can see, it's pulled back to about the $19 level. It looks as if it has changed direction, and it is moving, unfortunately, down. And it crashed through the 21-day line. Now, remember what I was saying about that 21-day line. If a stock moves decisively below the 21-day line, then I'm probably a seller. And the reason I am is because that means that the net didn't catch the falling body, and the body is going to be falling probably more. I suspect that RIOT blockchain is going to pull back. It may pull back all the way to the 40-day line, which is about $12. Now, if it pulls back to the 40-day line and reverses, we might have something that we can possibly move into. But right now, we just have to kind of sit there and watch it. Hopefully, everybody had their stop losses in because for this this downward push. Do I hate this stock? No, absolutely not. It's still really good. It's got an excellent checklist. But right now, you just can't be in it because it is pulling back. And we will see if it bounces or not. I mean, that's really the thing. I do like the company, but I don't think it's, I just think it's a little bit too, it's in a pullback. Jay is talking about GBTC, which of course is, if you've been watching me for any amount of time, I did well in GBTC in the early part of the month, and then I got stopped out. I got stopped out just recently. So I do like the GBTC. They hold about 4% of the world's Bitcoin, but as you can see, it is just taking a swan dive here, and it took the swan dive down to 32. Fortunately, I had my stop losses in right about here, so I was pretty well set up. I do think that we're going to see a bounce. Right now, there's just a lot of selling going on in it. Oops, come on. If I can, let's go to the weekly chart here. Yeah, as you can see, we're pulling back strongly to the 40-day line. If it bounces off the 40-day line, then I think we can buy it if it moves back up, and it's very likely to. It's very likely to, but in no case do we want to be looking to buy it below $16 because that's the 200-day line. We just don't want to do that. So let's watch this one. There's really no buy point. There's really no place to buy this right now, Jay. Unfortunately, there's really no place to buy this one because it is in a downward trend, and until the trend changes, either by bouncing off the 40-day line or the 200-day line, this just can't be bought right now. So as you can see, there's been a lot of sell-off. This is really in reaction to the news in Asia. As you can see, there's a little Easter egg there. That means that's the biggest volume since the last buy point. The last buy point was 1476. So it's been a little bit of time there. So the question is, will it pull all the way back to that 200-day line and bounce? It might, because that's where the original buy point was. So. But right now we can't. There's really not a buy point there's really not a buy point on GBTC. I think we're just going to have to wait on this one, unfortunately. So hopefully, I think it will be time again for this one because I just think it's so powerful. But right now we're just going to have to wait until it reverses. All right. So thanks for these questions, Mr. Singh. But I'm gonna have to go to somebody else. Okay. Oh, put in a lot of great questions. Okay, there we go. Hey, thoughts on EXPI after the stock split? You know, the interesting thing is I'm going to be doing, and thank you very much for this, Kyle. Great question. I have not, stock splits are very interesting in the way that they trade. There's a very predictable pattern that stock splits trade. And I'm going to be probably doing a chart school on this. I did this when Tesla split and Apple split. I did some, if you go back in my older videos on YouTube, you can see these. I showed you how typically a stock will trade into a split. Now, typically, if there's an announcement that it's going to split, it's going to move up. And it's basically, right now, maybe a good time to acquire it. I'm going to put out a chart school on this up until the date of record. So let's look at EXPI. And as you can see, it's moving up. Now, typically what will happen is from the time of the stock split announcement, the stock will move up until the date of the split. That's typically the best time to sell it, is when it reaches it does the stock split analysis. I do expect that this will move beyond 100, and so I'm going to put together a video on EXPI. So if you check back, what I'm going to do, if hopefully you are on hopefully with EXPI you're on the action trade alerts, because this will be part of the action trade alerts. And in case you're not subscribed to the action trade alerts. I will be doing a video and announcing this on how to trade EXPI, because I do think that there's potentially a good little trade in there. And if you're watching on TikTok, the easiest thing to do is to go to my profile and hit the subscribe button, and you can subscribe to the action trade alerts. I'm going to be putting the EXPI information into a video, which I'm going to be announcing, of course, on the subscribe list. So if you want to get on that list, or you're already on that list, you will be definitely getting a notification. But I'm going to analyze this tonight, make a video, and then show how I'm going to trade this, because I do think this is an opportunity, and I really appreciate you bringing that up. But EXPI, you need to subscribe to the action trade alerts. Of course, it's all free. Nothing, you can cancel anytime you like. But I'm going to put that together because it's a little bit more detailed than I can go over on the show, because it goes through 5 stages, and there's a good opportunity there. But thank you so much for this question. This is a really, really good question, and I do appreciate it. So let's take another question from TikTok. Thanks for everyone looking here. And by the way, I am simulcasting live on YouTube if you're interested. Great question. This is a question on Plug Power. And, I really like this company too. Plug, P-L-U-G is the symbol. So let's take a look at Plug Power. And here we go. Plug Power, let's look at the weekly chart first. We always want to start with that weekly. Just look at this thing. It is just a skyrocketing thing. It is, the problem is that when it gets like this, it's really not a problem. It's really a good thing. But when it goes like this, sometimes it's going to pull back. Nothing wrong with the stock. It's just going doing its thing. This is the weekly chart. It's up $3.65 today. Not today, this week so far. So that's pretty darn good. And it's got a 98 relative strength. And look at that. There's nice sales increases, and we see the funds moving into it. Let's take a kind of a look here on the checklist. The checklist is excellent, 7 out of 9. And let's look at the industry ranking. It's number 4. This is definitely the kind of places you want to be in these kind of stocks, because the industry rank is number 4 out of 197. So Plug is looking very, very good. Let's look at the let's look at the funds. Well, they're moving into it, so that's definitely something we want to see. Now the question is, where can we buy Plug? Where is a good place that we could enter this? Well, it seems as if it pulled up today, and there seems to be a little bit of consolidation. There's no really good place, but there seems to be a consolidation right about that line. So that is, I'm going to set an alert there, and I'm going to set an alert. So can we buy it at this point? Well, probably I would wait. I think that you're going to see a little bit of a pullback to 60, and then probably another bounce. But I do believe this is definitely buyable above about 68.50. Now we're not quite there yet. So what I would do with this now, this is a little bit more. This is a little bit more difficult. Here's the thing. I think we're going to have to wait on this about 5 days until it goes through earnings. But get ready to buy this as it comes through earnings. If the earnings are good and it's strong and it moves above about 65, I think that this might be a very, very good buy. But right now, I think we've got to wait because the earnings are in 5 days. Earnings can, as you know, they can affect, it can affect the motion of the stock. Let's take a quick look to see if there's any news that we can. So right now, you can't really buy this. It's too close into earnings. I never like to buy them a week before earnings unless it's just an absolutely special circumstance. So right now, we can't buy it, unfortunately. But this is a very interesting area of things. So alternative energy received bearish marks from a Wall Street analyst after it surged recently. So the analysts are saying it's overvalued. Sometimes the analysts are right, but a lot of times they're not. So here's what I would do on this one. Let's wait for earnings. Let's see what happens. And then if it moves above on news of about 65, then we might have a place to buy it. But right now, we can't buy it just based on the chart. It just isn't the right time to buy it on the chart. But it's an excellent company. So there you go. Let's see. Let's take a question from TikTok. I mean, from YouTube. This is a question on GSAT. GSAT. Let's take a look and see. I'm not familiar with it. Oh, Global Star. Okay. It's a fixed voice and data communications. This is kind of a penny stock here. Don't really like stocks under $10. And I'll tell you why. Because when they're volatile, I mean, yes, you can make money in them, but they typically are very thinly traded. And if they pull back more than 7%. And they can easily do that in a day. So that's one of the reasons why I'm a little bit leery on this. Okay, it's 98 relative strength. That is tremendous. Let's look at the weekly chart. I kind of want to see this one because, so look at this. So we were down in the dumps, and then all of a sudden, well, I'm looking at the monthly chart. This has been around since 2007, and it's sort of had a storied past. I mean, it's been all the way up here, but and now it's pulling up. Now the question is, can we buy this? Well, I wouldn't be interested in the stock until it moved above at least 450. So I just don't think you can buy this one. This is just too thin. The checklist is not good enough. It's only 44%. Not liking it. We do have some funds in it, though, 67. So that's increasing fund ownership. That's a good thing. And the industry sector is terrible, unfortunately. Telecom services, terrible sector, 155 out of 197. So unfortunately, it's cheap, and it's cheap for a reason. I think you want to stay away from that one. Thoughts on home? Oh, hey, thanks. Thanks for watching me. Somebody's watching us. I'm so excited. Home. I think home is doing well. Really good. At home group. Let's kind of take a look first at the weekly and then see let's do the small test first on it. 27.75 is currently where it's trading. It's up $2. Wow, that's terrific. You know what? This is a winner chicken dinner because there's a buy point at 23.92. Now, I'm going to look at a few other things, but I think this is absolutely viable. 98 relative strength. We have very nice increasing revenue. That's absolutely what you want in a growth stock. We have increasing fund ownership. That's very important. 94% of this stock is owned by funds. That is a very, very good thing. And of course, it's in beautiful Plano, Texas. The only reason I say that is because I'm basically in Plano, Texas. I'm just a little bit south of Collin County, matter of fact, a block, and on Preston Road. So this is kind of a local company for me. All right, so let's take a look at the checklist. The checklist is excellent, 8 out of 9, and the ownership is very good. Fund ownership, 94% of the people in this are funds, liking that. And it's increasing to 89. The industry and sector is excellent, 22 out of 197. We always want to try to buy in the top 60% of all the sectors. There's 197 sectors in the economy. This is number 22. So this is excellent. There's 17 stocks in this area. Kirkland's one of my also all-time favorites is in here too. It's symbol KIRK. But this is a very good sector. Another local store here to Dallas, Container Store. Actually, I think they're in Capel. They're also in this sector too. So this is a good area to be in. Sleep Number, of course, is in this, and Bed Bath & Beyond, which is a kind of a cool. My girlfriend loves Bed Bath & Beyond, by the way. Just thought I would mention that. So that is all looking good. Now, can we buy this? You know what? This is looking very, very good. Would I buy this? Well, the consolidation base first stage 2362. So let me put that out there. Let me put that out there on. I was putting it on the chat before, but you can't. Nobody ever. Sometimes you can't see that very well. So what I'm going to do is I'm going to put a banner up for the buy point for a. Let's see. I'm going to put buy point for and this is home, HOME, is equal to, I'll give you that exactly, 23.94. So let's add that banner. There we go. Whoops, did I get it right? No, I didn't. So that's 23.94. Oops, 95. There we go. Oh no, that's a Palantir. Sorry about that. Oh, the wrong one too. I'm giving you bad choices here. Sorry about this. Oh, did I get that? Yeah. Yeah, there we go. Buy point for home. I had all these ready and I'm doing it wrong. The buy point for home is 23.97. Okay, it's basically right here at this little, if I can show it to you. Come on, baby. Sometimes my pointer doesn't work. And there, okay, but anyways, it's right there. That's really right where it is. Right here is the buy. And I do think you can buy this one if it moves above 23.94, and it's 24.75. So it's definitely in the buy zone right now. So thank you very, very much for that question. That's an excellent question. And home is a good one. So I'm going to put home, and that's in the buy zone. All right, so the buy zone now for home. So that is a very good question. Definitely worth it. This one, I'm not in it currently, but it looks very viable, and it looks like to be in a very good. It looks to be in a very good area to buy it right now. So it does look very strong, and thank you so much for that. All right, so let's look at Twitter, and okay, let's look at Twitter first, Ollie. Twitter has been pulling back. TWTR is the symbol. I haven't been in Twitter for a while. It's pulled up a little bit today. I think there's going to be some bargain hunters. After they banned Trump, it took a hit. I mean, it definitely took a hit. Let's look at the daily to see. It may be pulling back a little bit. Yeah, okay. I just wouldn't touch this one with a 10-foot pole right now. It's got a 55 relative strength. That's not good. It's got earnings. I suspect the earnings will be pretty good for them, and the relative strength line is moving up, but we have now fallen below the 40-day line. That is a red flag. We have a downward trend on the 21-day exponential. Typically, we don't like. The 10-day has already crossed the 21-day. The 21-day may cross the 40-day. That is a trend. That is a downward trend. Though, and today we've had about average selling, but we're selling. We did have a dead cat bounce right here, but we're going to have. This is fraught with problems. I don't think you want to be around Twitter right now. It's just not looking. The chart doesn't look right, and I think it might. At least for me, I don't even want to watch this system. There's too much. Political stuff going on. I just think it's too hard to buy it. I wouldn't buy it. There's other better opportunities out there. So, anyways, hey, thanks for watching me from thanks for watching me from London. Wow, I'm excited. I've only been to London twice in my life, and of course I really liked it. Went to the British Museum, by the way. It was really excellent. Let's see. I'm going to look at Square. Square here's the thing about Square. Square has a fairly large exposure to Bitcoin, so that may be an issue. We have, you know, there when Biden was inaugurated, there was a Bitcoin sell-off in Asia, which unfortunately has affected Square a little bit. PayPal to a lesser extent, but it definitely has affected Square. It's still really strong. It's got a relative strength. It's still got a relative strength of 94, but there are some ominous signs on the horizon, and these are the sell bars here. So the question is, let's look at the weekly chart to see. It's still got a tremendous trend. I mean, it's still got a tremendous trend. So, you know, as long as it stays above that 40-day line at about you know, at about, you know, right about 215, I think we can still watch this. I wouldn't be buying it probably now because I want to see if it falls through this 40-day line. So let's go back and look to see on the daily chart. Now, of course, the daily chart, it's not going to be the 40-day line. It's going to be the on the weekly chart, it's going to be the 50-day line, and on the daily chart, it's going to be the 40-day line. So, but still, we're still above this 40-day line. So as long as we're above this and we're moving higher, then we could possibly buy it. I don't recommend it right now because it looks like it may be changing direction. We don't know about that, but I'd be a little bit concerned. You know, here's the thing. Here's what I think is going to happen. It's going to pull below this line, and currently that's at 211. So it may pull below 211, and if it doesn't stop and reverse, then it may be going lower. But definitely in the past, we've had several bounces off the 40-day line, but they've been accompanied by huge volume and buying, as you can see right here. So here's what I would do. I would watch this one. I would set an alert basically for this line here. So what I'm going to do here is I'm going to set that alert for about 211. And basically what that does is that if it moves below that, it's going to alert me because that's when I want to start watching it. But right now, I think we got to be careful about Square. If you're in it, it's okay, but set your stop losses. You know, try to defend your stop losses at about 210. If you're in it right now, I think that's where you want to defend your gain if you're in it already now. I would not add to this position right now, but I really appreciate the call. I appreciate I appreciate you watching from London. That's pretty exciting. It's pretty exciting. Okay, so let's look at the next one. GRN. The GRN real quick. GRN and. Okay. Oh, exchange traded note. Okay. It's okay. So this is the carbon. This is an interesting one. You know. Oh, it's in France. Interesting. Okay. So these are the carbon credits. You know, I once was involved with a company, and what we did is we sold green energy. But what we're doing is we're basically buying and syndicating the renewable energy credits, called the RECs in the United States. In Texas. Texas is a big area for doing this. So, I mean, I'm not saying anything bad about the market. The thing about it is when you see a chart like this, with these kind of, where it's not smooth here, this is a relatively, this is a relatively thin market. We have had some selling in it. The relative strength line is rising, but you know what? I don't think. This one, there's other better places to be, I think. It's only got 3 out of 9 on the checklist. It doesn't really have any fund sponsorship because it's an exchange traded note. I mean, I definitely think you could make money in this one, but there's just so many other better places to be in the market. I think you might want to look possibly. I can't really recommend this one, David. It's thin. And you might be able to do well in it, but there's other better places to be for this one, I'm afraid. Oh, I'm sorry. You were talking about GM. I was looking at GRM, and I'm sorry, I was looking at another one. I gave you the wrong one. Now, GM, I do like. I do like GM. I really do like the GM. So I gave you the wrong chart. Apologize on that. I fat fingered it. The carbon credits, I think that's too difficult. Now, GM is quite different. Now, we've had a little bit of a sell-off today, but the weekly trend is very strong. Is very strong. The first major buy point was basically here at about 46, and now we've moved above it. I think we're going to get a consolidation on this, but we have had strong volume, and this is really interesting. We've had strong upward motion, and we've had strong volume for buying. So that's very, very good. You know, we have increasing fund ownership. Currently, believe it or not, it is it has a return on equity of 18% currently, which is, you know, if you're looking to put money into the market and you're looking to put it in a savings account, boy, you know, the dividend just on General Motors is probably better than that. Now, it's a much safer company than it used to be. It did have a bankruptcy in 2013, but the American taxpayer and their kindness paid off all their debt pretty much. And so it essentially is one of the largest companies in the world with very little debt. So I do like that aspect of it. And plus, as the market opens up, I do think for, you know, after the COVID thing, a lot of people are going to be wanting new cars. They may not be flying on airplanes because of the restrictions, but the car business, the number one sector right now in the economy is automobiles and automobile manufacturers. So I think that this one possibly is very good. It's also got a relative strength of 90. By the way, I own this stock, and I started buying it right at the pivot on this. It's still the checklist is acceptable. It's 7 out of 9. It's not stellar, but it's still very good. But we do have that increasing fund ownership. So the question is, can you buy this one? Well, it's a little bit extended. I'll be honest with you. Now, what I would be looking for is, it looks like we have essentially a line here. So basically, if it moves, you know, tomorrow or so, if it moves above about 56.30, then I think you could possibly go into it. What I would do, and again, I did buy another position, maybe a little bit early, but you know, I did buy another position on this. But what I would do on this one is, for GM, I would set a buy stop limit order at, and I'm looking here on the chart, at about 58.20 plus 10 cents at 58.20 plus 10 cents equals 58.30. So that's where I would set my buy stop limit order for GM. I would set it basically at the 28.20, which is right above this consolidation here, plus about 10 cents, or 58.30. So as it moves higher, because it's pulled back now, and as it moves higher, then it will move through that. You want to buy it always on an uptick. And that's how you do it with the buy stop limit order. And by the way, if you need to learn kind of what it is, I made a video on how to set a buy stop limit order. It's available on my YouTube site, and there's a Dallas Trading Floor YouTube site, and it's in the it's in the chart school videos. So it's a buy stop limit order. And I'm going to do another one. This is a great way to buy. This way you don't have to look at the screen all day. You look at the chart, you set it, and then as the stock moves higher, that's when you buy it. So that can be very, very beneficial. And that's how I buy a lot of my stocks too, because I'm busy during the day. I can't watch the screen all the time. So that's how I do it. So I think the last question today, anyways, from TikTok. So let's look at one that I want to. Let's look at one that I have, that I was in. I was shaken out of this one. I do like this one. It's called Edit. It is a gene splicing company, and along with CRISPR, I like it. But it's been pulling back as of late. So let me show you the chart here. And this is Edit. And basically, you know, right now we can't buy this because it's fallen below that 21. Let's look at the weekly chart first. It's fallen below that 21-day line, and go over to the daily here, the daily chart, and you can see. So it looks like it may bounce on the 40-day line. So right now, you just can't buy this one, unfortunately. I appreciate the question from Smooch001. I like that handle. You just can't buy this one, unfortunately. I really like the area. I was in this one. I got shaken out because of the pullback. Unfortunately, edit right now, you just can't do anything with it, unfortunately. So I didn't get to everybody. Here, but I want to see what's your opinion on Dropbox. I love Dropbox, actually. I use Dropbox. I really like it. I'm not going to go into it, but today, because I want to talk a little bit more about some of the other ones. But I do like Dropbox. I think it's Drop. Well, let me just pull up the chart here. DROP. I think it's Dropbox is DROP. Is that right? Oh, GBX. Is that DBX? Yeah. DROP. DROP. No. DBX. Yeah, it's Dropbox. Yeah, DBX. Sorry about that. Yeah. Okay. Let's look at the chart for DBX. And that probably will be the last for today. Unfortunately, I wish I had all the time in the world, but I do really enjoy this. Okay, there is a cup, first stage cup at 24.14. That's the buy point. Currently at 21.94. Now, does it look like a cup with handle? Well, guess what? It does. But there's some bad signs here that I want to show you with this one. So I probably wouldn't be in this one right away. The relative strength is low. We do have some good increasing sales. I'm always liking to see that. And the funds are very strong at 56%. And we do have increasing fund ownership. But right now, I think that we want to see this thing consolidate a little bit more. It's just not the right time. It's still got a 77% checklist, and the ownership is very good on it with the increasing fund ownership. The industry sector is excellent at 8. That's computer software database. So that's still a very, very strong sector. Here's the thing. I wouldn't buy it right away because I want to see it move above that 24.14 buy point at the very minimum. So here's the thing. I'm going to put this out here. This has a let's see if I can put this up here. So basically, DBX, which is Dropbox, DBX is the symbol. Buy point equals 24. Oops, yeah, we're good. 24. Did I give it? Yeah, 24.14. So I wouldn't buy it until 14. You get that in there, yeah. So with a buy point, you always want to go 10 cents above that buy point on strong volume. So that's where I see DBX's buy point. I wouldn't buy it right now. I would watch this one just because just because it doesn't meet the criteria. But I really appreciate that question. That's a great question, and I do like Dropbox. I just don't like it at this stage because it's 33 relative strength, and it's sort of hanging out, and it hasn't really made its move. I want to see it make its move above that buy point. Thanks everybody for watching me today. I'll be back tomorrow at 2:30. And if in the meantime you want to get on the Action Trade Alerts list, super easy to do. All you have to do is go over to well, you can do this too. You can also, that's also where the videos are. You can subscribe to Action Trade Alerts. Oops, I've got all these things, but I'm not getting the right one. There we go. There's the subscribe. So subscribe to the free Action Trade Alerts at www.dallastradingfloor.com. And if you're watching on YouTube, on TikTok, super easy. Just go to my profile, hit the link, and you'll see a button that you can push to subscribe to the Action Trade Alerts. And I'll be doing tonight. I'm going to be working up an action plan, a trade plan for Exit Realty, EDIT, is it EXITI? I think it is. So, and I'm going to get that out to everybody on the Action Trade Alerts. So if you just go to www.dallastradingfloor and sign up there, or if you're on TikTok, you can just go to my profile and just click the link and get right to it. So I will be back tomorrow at 2:30. Didn't have quite time to get to QS. I will be back tomorrow at 2:30 Central Time. Till then, happy trading, and I hope to see you back here